Good afternoon, everybody. My name is Mark Ashton, and I'd like to welcome you to our last investment webinar of 2020. It's been an exciting year, to say the least. A very challenging year if you're looking at small caps in both South African but also global environment. But we've also seen some incredible success stories in the tech scene, both locally and internationally. And today we've got one of the very interesting listings sitting on the JSE at the moment in the form of Capital Appreciation. We're joined by Bradley Sachs and Michael Shapiro from the Capital Appreciation team. They're going to take us through the investment case for Capital Appreciation, but maybe, Bradley, just before we kick off, I mean, one of the things that's, well, the two elements that particularly interest me about this discussion, the first one being about looking at tech. Nobody looks at the JSE and says that we have anything viable in terms of technology investments. And maybe just a starting point is, how do you respond to people who see the glamour of the US market and then they see what's a struggling tech environment in South Africa? I mean, is there still value in being listed in the local market from a tech perspective?
Well, I think there is a huge dichotomy between the way that the US investor universe measure and value tech companies in the US versus the way South African institutional investors look at them in South Africa. The multiples are just hugely different. You can look at companies in the US that are trading at 15, 20, 30 times revenue. In South Africa, you're starting to talk about maybe a 5 PE. And that's obviously a little bit of a frustration for us as we post our results and we participate in those sectors with the same types of growth. We're not getting the level of market appreciation that we think you could get in an international market. So it is an element that it is something that we think about on a not irregular basis. But fundamentally, we are a South African company and we are listed and trading in South Africa. And so our view is that if you continue to deliver the results, the market will catch up with your underlying performance. But I don't think the US market levels will ever be reached in South Africa in terms of multiples, and that's obviously a factor that I suppose if you're starting afresh and you have a jurisdiction to choose, you would probably choose a different jurisdiction than South Africa.
You've got quite an interesting story. I mean, there was obviously a lot of interest in the SPAC model when it came to South Africa. We saw a couple of SPACs come to the market and promptly give the money back to the shareholders when they were unable to deploy the capital. I mean, what had been your take on, firstly, the SPAC model on the JSE, but also being listed on the JSE? I mean, has it been a rewarding experience? What's worked for you? What hasn't worked for you?
So when the SPAC model was first announced by the JSE, there wasn't really a roadmap, and the rules around the SPAC were pretty undefined, whereas in other international markets, there was a formula that you had to follow, and there were some pretty strict guidelines. With the JSE, we had to work with them to try and define what a set of characteristics would look like. And at first, the model wasn't very well received by institutional investors in the South African market. We were the first to be listed on the main board, so we had to cut a whole new path through the field. Internationally, it's been a huge success as a product. You've had some SPACs, most recently one by Pershing Square, raised $4 billion as a blank check company. And many of the tech IPOs over the course of the last number of months have been executed through SPACs. So there is a little bit of an educational curve that I think the South African market needs to go through. But it is a very interesting vehicle for people who have track records, who are well established in business, who have credibility to raise capital and then go and bring a company or companies to the market. From our perspective, overall, it's been a rewarding experience. The share price aside, it does give us credibility. It gave us access to a fair amount of capital. And I think from a business perspective, being listed on the JSE has had a net positive effect. When we walk into the boardrooms of some of our largest clients and they want to know who we are and what we do, and you talk about the fact that you're listed on the JSE, there's a level of credibility that comes with that and a level of transparency and disclosure, particularly when you're dealing in the financial services sector. I think people are interested in knowing who they're entrusting some of their most core infrastructure to. And that's been a very strong positive for our synthesis business and a very strong positive for our payments business. So overall, I'd say the net position is positive.
Excellent. Before I let you jump into your interim results presentation that came out last week, I'd just like to remind the audience that we do try and encourage an interactive session. We do want you to be able, we give you a platform to be able to engage with the management of these businesses. Feel free to drop your questions in the Q&A facility or in the chat facility. The idea is, we're tired of being spoken at. We've had a lot of Zooms and team calls this year. The idea is to be interactive, and we do want to be able to create an environment where shareholders can interrogate the management of these organizations to get a sense of the people behind these businesses. So by all means, pop the questions into the Q&A facility or chat facility, and we'll certainly give you access to it and the chance to ask your questions. A reminder that a playback facility will also be circulated to all the delegates that have registered for this. Bradley, over to you to present the interim results presentation.
Great, Mark, thanks. We have a full webcast on our website that people could go and look at a later date. I'm not going to go through all of it, but the results came out last week and we are quite pleased with the performance overall. What I'm going to do is just give you a sense of some of the secular trends that are occurring in the market and how those have affected us, and what we believe the prospects are going forward. So for people who don't know our group, we have two divisions. We have a payments division, which has a business called African Resonance and another called DashPay. And we have a services business, which comprises synthesis. The payments division provides both the infrastructure for the acceptance of digital payments. So that would be card or using your smartphone for Samsung Pay or Apple Pay or any other type of capability. And our services business is very tied to the cloud, closely aligned with the activities of Amazon Web Services, AWS, who is an organization that we have a very strategic relationship with. Ultimately, as a group, we are focused on delivering innovation and value to our clients and the clients of our clients. We have an enterprise development initiative in the form of GovChat, which is an exciting prospect. From a COVID-19 perspective, I think we'll just spend 2 seconds on that. All of our staff remained fully employed. All of our staff were fully remunerated. We paid all of our suppliers on time, and I think it's a testament to the underlying strength of our business. We had spent a lot of time on making sure that our infrastructure was robust from a disaster preparedness perspective, and we were able to pivot very quickly when COVID hit to be able to have everybody working remotely, and we didn't really miss a beat during this period. From a silver lining perspective, because ultimately we do think that COVID has a silver lining for us as a group, the era of digitalization and the need for technology has been yanked forward quite dramatically over this period. And the impetus to remove cash from the system is becoming more and more prevalent, even under the guidance of the World Health Organization. And that helps us as a business as we move to deploy payment infrastructure. When we think about how COVID affected the economy broadly, this is an example. This is extracted from Nedbank's interim results that they released in June or July, and what they were able to show is the level of activity at the point of sale devices of their customers. The dark blue lines indicating the level of activity prior to lockdown, and then how the various sectors in which they operate were affected during the period of lockdown. This had an effect on our business as well, because we provide some of the transaction services and infrastructure into these sectors. But we weren't nearly as badly affected as many others, given most of our activity was in restaurant or in the fuel sector. And those were part of essential services, and our trading performance during this period was, while affected, was relatively less affected. Our capacity, which is an indicator of our activity, was down during the period of lockdown, as you can see through the gray lines, but we have picked up quite dramatically in October. And in our repairs business, we've started to pick up in July. And so we're sort of back on a trend, which is reflective of incremental payments activity overall. So our position is we have a very strong and healthy balance sheet. We have a group of managers who are very experienced, who have been around the block for a while. We're able to focus on execution during this very challenging time. We have huge domain expertise in the areas in which we operate. And there is this fantastic secular trend that has accelerated on the need to digitalize the South African economy. Those play very well to our core capabilities. Our client exposure is to very large cap, well-capitalized companies who need technology to pursue their underlying businesses. We have a very asset-light business, and overall, I think we traded exceptionally well during this financial period. So much so that when you look at our results, when against the backdrop of a tough economy, our businesses grew revenue at 15%. Our EBITDA grew by 20%, and our trading profits was up by almost 24%, which is a reflection of the operating leverage that we have in our business. We did declare a dividend of 2.5 cents a share, which is up 11% from the prior year. We have no debt on our balance sheet at all, and we're sitting with just under 500 million rand of cash, which means we are relatively well capitalized. We have lots of financial flexibility, and we are able to pursue acquisitions or fund our organic growth, which we have experienced. In terms of our operating leverage, this is a good example of looking at the chart in the middle versus the chart on the right. You can see our payments revenue was up 15%, but the EBITDA was up 33%. And for us, that is a great statistic and something that we measure quite carefully. The same was not true in services, but that's a result of us investing for the growth. And you can see on the left-hand side that we talk about headcount growing over the period between September of last year versus this year. And all of that incremental headcount was in our services side. And most of those people came on in February, just at the beginning of the calendar year. And we weren't able to deploy them that quickly before we went into the lockdown period. So that accounts for some of the margin compression that we are seeing on the services side. But very pleased to report that the services business is now back in stride, and the demand associated with the need to migrate to the cloud has come through, and the capacity that we built is being utilized. In terms of our payments division, we grew our estate by 31% year on year, which is fantastic. Even during the period of COVID, we grew that by 9%. The period of the sales of terminals during this period versus last year was up 17%. We have a really great pipeline of opportunity. We have a fantastic portfolio of device form factors and services. We introduced two very important things. One is an Android solution, which allows us to expand the market and go down market. And the second is we introduced a product called Halo Dot, which allows us to allow any person who has an Android-based device, be it a smartphone or a tablet, to start to accept payments on that device, which is fantastic if you want to go down into the informal sector or into the SME sector. In the services arena, which is the business that Mike Shapiro, who's with us, runs, we are the leader in AWS delivery in South Africa and across Africa. We have the highest number of accreditations. We just received an accreditation for a security distinction. And we have a domain expertise in financial services, which we've now extended into the retail sector, and we're exploring expansion opportunities into healthcare. And very notably, AWS recognized Synthesis as their social impact partner of the year for the work that they did in developing the GovChat platform, which was very effective in assisting government with the social relief of distress grants that they distributed at the beginning of the COVID period. So just to give you a sense of the opportunity and the way that we think about it, a conference that I attended a few weeks ago here in New York suggested that, that the financial services sector has accelerated its deployment of technology by about 3 to 5 years as a result of COVID. And I would say in South Africa, that's probably more like 5 to 7 years, given the acceleration that is necessary. In terms of views on technology, I think the commentary by one of Citigroup's executives sums it up. They have gone for a physical light and a digital heavy presence as they think about their footprint going forward. A different seminar that I attended, which was had a slide presented by Forrester Research, speaks about the trends that are affecting the financial services sector. And they talk about perspective. So you have a perspective from the regulator, the consumer, the bank, and people who operate as collaborators to the financial services sector. But the issues that are affecting them are invisibility, meaning that technology is underlying what we do day to day and you don't see it. The activity needs to be insight driven. Ultimately, it's all about data. The benefits are being connected are what's critically important, and ultimately having a purpose to what you do. And all of these types of elements are enabled by technology. If you don't have technology, you are going to be left behind and competitors are going to take over your customer relationship. And in fact, when they speak about the importance of digital, you can see that in a pre and post-COVID world, digital has risen to number 3, and prior to COVID, it was probably around about 13. It didn't even make the top 10. In terms of cloud, just to give you a sense of the opportunity in which we are chasing, the South African cloud market is expected to grow by over 30% on a compound annual growth rate over the course of the next 4 years to be about a 22 billion rand market opportunity. And that is just huge. Amazon in the most recent quarter posted $11.6 billion of revenue in one quarter associated with their cloud business. And we are very closely aligned to their activities. From our payment side, COVID has made contactless an absolute necessity. And this was something that we had enabled a number of years ago, in fact. And you can see the pictures on the right-hand side of this page are some of our terminals in market for FNB, for ABSA, for Standard Bank, and Nedbank. I don't have a Nedbank picture here, that allow a lot of the functionality which is driving payments to occur. The need to remove cash from our economy is something that McKinsey demonstrated in both mature and emerging markets. The use of cash is declining. In South Africa, when you think about cash, it still represents in excess of 70% of transactions done. And part of that is because there was no infrastructure available for people to use a digital form of payment. With the SASSA grants, there are more than 50 million cards in the market, so meaning people can transact digitally if they had the infrastructure in which to do it. And so the question is, how do you pursue that market? We have historically played, and most payment companies have historically paid in the top part of the pyramid, which is a market of about 450,000 large. But the opportunity is to be able to go down into the small and medium enterprise sector and into the informal sector. And we think that that market is in excess of 800,000 in terms of opportunity. And what you need are form factors and capabilities to do that. And we have that now in the form of Android devices, both in a physical form and also in a smartphone form, which I will go through. In terms of trying to show the opportunity in South Africa, you can see the penetration of devices is only about 4.5 per 1,000 people, whereas in other countries around the world, the penetration is much higher. And so part of that is a result of poor telecom infrastructure, which is also being solved. And with the ability to communicate and be able to deploy devices at good price points, we think that penetration will increase naturally over time, and we're certainly going to be doing our part to make that happen. Our clients, just so people have a sense, are all the large financial institutions in South Africa, not only on the banking side, but also in the insurance side. We deliver value to them by focusing on excellent execution. And this was a strategy that we laid out at the very beginning of our journey after making these acquisitions. We determined that to invest in the financial services sector, and more particularly in the technology area of financial services, excellence by way of execution was critical. Our technologies are based on proprietary platforms, and we do provide a complete end-to-end solution, which allows us to be very robust in what we do. In terms of our devices, we have very, very credible device form factors, both the first and second leading manufacturers of devices in the world. We have relationships with, and we provide these devices into the market. I mentioned the Android-based solution set that we have, which can be deployed across smartphones and tablets. This is a product called Halo Dot. It was a product that was developed by our team at Synthesis. It was deployed at first by Nedbank in South Africa. Synthesis is one of only 8 companies around the world that have developed this capability that's been accredited by both Visa and MasterCard. And it is exceptionally exciting. The product was actually launched in July, with going to market in August with Nedbank. And here is an example of the use of a Samsung phone by a customer at a merchant using the Halo Dot capability. This has broad applicability across the globe, and we are pursuing opportunities across Europe, Asia Pacific, and the Americas in deploying this, because it is a great way to allow small and medium enterprises to become independently accepting of digital payments. In terms of our revenue model, for people who haven't had exposure to us in the past, we have some businesses which are the predictable businesses that are established and easy to understand, and those are the selling of devices, the maintaining of the devices, and then the management of the device estate in the market on behalf of the large financial institutions. Those are mature businesses that are operating very well with good growth characteristics in and of themselves. And then we have businesses that are emerging, that have unlimited prospect, and they are tied to the level of transaction activity and licensing revenue that we generate. And those are tied to the level of activity that occurs through our estate overall. Giving you a sense of how our business has grown, we measure the size of our estate that we deploy, and then also that we manage. And so we started this business in 2017. We had 49,000 devices in the market. As of this September, we announced that we had in excess of 200,000. And that is a result of taking market share. And we've been taking market share from old incumbents who either have older technology or who have service levels that are subpar. And so from our perspective, this is a true testament of the market talking that our solutions are working well. And we focus on this type of delivery. In terms of our transaction activity, we do payment services. The payment services activity, which is measured through the value of transactions through our estate, has increased by more than 11 times over a 3.5-year period. And we expect this to continue to grow at a relatively nice rate. Even during COVID, it grew by 14% in the 6-month period. And this is an area where we have spent enormous time, effort, and resource in developing new products and services to take to market. And so from our perspective, this is the area that has great growth potential in payments that we are looking to exploit. Here's an example. It's sometimes hard to describe what we do without use cases. So we have a number of different use cases on our website, but here's an example for a manufacturer of veterinary medicines, a company called MSD, which manufactures Bravecto. For anybody who's a pet owner, you'd know Bravecto. It is a relatively expensive product. They wanted to try and encourage loyalty. They wanted to be able to drive sales through the veterinary surgeon. We have payment devices in the veterinary clinics. We have other types of loyalty products on the veterinary service devices. And so they wanted to piggyback on that. And so we've developed this capability to manage it. Here's an example of our devices on the right-hand side and a company called FINTECH. They are a provider, they are a consumer lending marketplace effectively, where you can do lead origination on the device. And for us, that lead origination is a transaction, and that transaction gives rise to a revenue stream to us. We don't take any credit risk here, but it is allowing physical point of sale device infrastructure to effectively act the same way as you would in an e-commerce environment if people were transacting online only. Here's another example of a company called Ruby Blue that is a distributor of funeral insurance policies, and they manage the insurance policy on behalf of the insurance company and also the network that sells them. They're using our devices to accept payment and also manage the insurance policy. And so all of that activity are transactions that give rise to opportunity to us. Our growth strategy in payments is relatively simple. We're growing the market. We are continuing to take market share. Our clients are very well established in South Africa, and we continue to support them and help them across Africa as they expand. The South African banking institutions are moving across Africa and are looking to upgrade their African operations. We have a whole host of new products like the 3i just mentioned that are currently in pilot, which will launch in Q1 of calendar 2021, which we'll be able to talk about at our next results, or maybe even before that. And ultimately, it is taking our products to different markets and innovating. And so we think that the secular trends in payments are fantastic for us, and we're continuing to pursue that quite aggressively. The businesses are very cash generative, and so we are lucky enough that we are turning a profit while we're investing in the future as well. On our software and services segment, we, which is the business called Synthesis, we are viewed as a leader in the area of cloud and digital channels. And the team is very focused on the financial services sector, which is where its history lies. But that capability has provided a number of different disciplines, either in the rigor of financial services or the security around financial service delivery, or just the general need on ensuring high availability and uptime. And so we are using those capabilities to expand into different areas, as I mentioned, retail among them. But the team has been involved in cloud for a number of years and is very experienced. Within our operations, we have six divisions. One is digital channels, which is the mechanism by which customers engage with their financial institution digitally, whether it's on the internet or through smartphones, our cloud activity, or our RegTech operations. And our RegTech operations are a suite of software solutions that allow customers, banks, to interact with the regulators efficiently and do the reporting that is necessary for them to stay in compliance. Areas which are of newer vintage are areas which we call intelligent data, which is highly dependent on data science and big data and analytics. And then an area called managed services, which is the result of the natural migration. Once you put your businesses in the cloud, somebody needs to manage those activities, and Synthesis provides those managed services capabilities for customers. And lastly, we have a payment and crypto technology area, and they were responsible for the development of the Halo product. A hugely competent group of people. People talk about AI, and I wanted to give people a sense as to what that means. In terms of the global market, the expected growth in machine learning is expected between now and 2024 to be in excess of 40% and end up being a $20 billion market globally. In South Africa, it's obviously smaller, but it's coming off a very low base. And the market opportunity there is probably about $650 million in 2025. And so that is measured in dollars, but it's the South African opportunity. And this is an area where AWS, with whom we are very strategically aligned, is the dominant player. And from our perspective, as financial institutions and other types of organizations try to extract value from the data that they have, this is an area that's going to be in high demand and is of substantial interest to us. I did mention the MSP capability, and in the MSP capability, MSP stands for Managed Services. It is the natural migration of progress. Once you consult to a client, you provide them with the knowledge on how to migrate their business, and then you then migrate it. Somebody then needs to manage that cloud infrastructure. And that for us is a very important growth opportunity. The opportunity is expected in the US to exceed $80 billion, growing at about 17%. In South Africa, it comes off a much lower base, and the growth is expected to be substantially higher than that. South Africa is relatively far behind the adoption of cloud compared to other international markets. But from our perspective, it's an area where institutions have made a commitment to invest. They are investing, and we are very well positioned to be able to assist them. So from an opportunity perspective, I think Synthesis is well positioned to be an outsized partner with our client base as they adopt cloud going forward. I did mention this at the beginning, and I just mention it again. For the work that Synthesis did with GovChat, they were recognized by Amazon as a social impact partner of the year. And that is tremendously rewarding for the team at Synthesis. We have in the past, and I know that it's in different forums, provided case studies of some of the work that Synthesis has done, and I will spend a little bit of time on this for this audience. When ABSA was rebranding after the separation from Barclays, there was the need to change all of the branding and all of the artifacts. It was a project that would have required probably 2 years if it was done without the assistance of technology. Within a period of a few short weeks, Synthesis was able to deal with over 40,000 artifacts and assist the ABSA team in removing all vestiges of Barclays. Vitality, as you know, is a division of the Discovery Group. Synthesis manages their cloud infrastructure for them across the globe, all the way from Asia through to the Americas in South Africa on a 24/7, 365 basis on the back of the AWS Managed Services product. Standard Bank is an example of a number of customers who have taken our RegTech product. And so you can look at the other names on here, each of which is well regarded in the South African marketplace. We also show this by way of example, other use cases, and to demonstrate our expansion in other geographies. Al Baraka Bank is a bank out of Bahrain. They have taken our RegTech product for their South African operations. They are Sharia compliant, which demonstrates the flexibility of our platforms, and is another example of where Synthesis is prosecuting its business. We did help AFGRI move their entire infrastructure to the cloud, and the establishment of accounts in a cloud environment. This has helped them save costs by up to 50% and is reflective of the types of opportunities that people are pursuing in the cloud, not only for the cost savings, which is one element, but also because of the strategic importance around cloud functionality in driving innovation, in bringing new solutions to market. And that was certainly the case in the context of AFGRI and their Unigro financial services business. I want to see if there are any questions on the business overall. I can't see any here.
Yes.
So I'll.
Bradley, so there are a couple of questions that have come through. I don't know if I can, would you like me to run them through so you probably can't see the chat function. So the first question that's come through is, how long is the exclusivity agreement with Nedbank on the Halo product? Would it be open to other banks, both in SA and ex-SA?
So the exclusivity with Nedbank was for 1 year from the date of availability. So the exclusivity ends in April. And we have already signed up a second provider of payment services in South Africa who transacts through Nedbank. And after April, we'll be able to take it to any bank in South Africa. And so that the exclusivity is only South African. With respect to the rest of the world, there are no limitations on what we can do. And so we are currently in discussions in a number of jurisdictions on making Halo available in those jurisdictions.
Second question has come through here. I mean, you've got quite a good track record of paying dividends. Can management explain the dividend policy and its approach to dividends?
So we have no set policy for dividends. What we have been able to do is, at the end of every financial reporting period, is look at how we have done operationally, look at what our opportunity set is, and make a decision as to what a fair dividend is in our mind. And so we've continued to grow earnings, and so we think it's fair to grow dividends as well. We have the cash resources, our business are generating cash, so we'll continue to have a relatively fluid policy, but with an understanding that shareholders are entitled to receive a good dividend.
Building on that, I mean, are management major shareholders in the business, and can you explain how you align management incentives with shareholders? So I assume that's working around executive remuneration, what the policy is there, and how it's aligned in terms of either long-term incentives or through the holding of the base equity.
Yeah, so management are huge shareholders in the company. Amongst members of the board and representatives, we collectively hold in excess of 30% of the shares in the company. And so our interests are absolutely aligned with the interests of shareholders. It was part of the principle that applied when we set up capital appreciation right at the very beginning. And so from our perspective, the senior management team have taken very modest salaries. In fact, we only started taking a salary in this year. Prior to this year, Alan, who is our CFO, who's on the call with us, and Mike Pimstein, who's the joint CEO with me, were not paid any salary at all. And so our policy is to pay for performance. We have a relatively modest short-term cash incentive bonus, which are paid to management, but the majority is by way of share appreciation, a conditional share plan, which allows people to participate in the growth of the business as the company continues to perform and deliver.
Follow-up question, is this a South African technology play, or is the intent to move this into a global technology player that has its roots in South Africa?
So definitely the latter. There is lots of opportunity in South Africa, and South Africa is our backyard from an operational perspective. But the technologies that we have and the capabilities that we have have broad applicability, some more than others. And so the ones that we think have direct applicability now, we're pursuing immediately. Ones that need a little bit more of a maturation process will be deployed over periods of time when we think the opportunity set is right. But Halo is an example of that. We think that the global market is ready for Halo, and the capabilities that we have are world-class. The work that was done by Synthesis in developing Halo puts them among one of only 8 companies around the world that have been able to get that type of certification from Visa and MasterCard. And so when you look at Asia Pacific, you look at Europe, you look at the Americas, you look at Australia, the need for contactless payment in those device form factors is apparent and is something that we are pursuing. In terms of cloud capabilities, Synthesis is pursuing those in different jurisdictions as we speak. And we operate systems in 10 countries currently, mostly in the form of Discovery's Vitality Initiative. But we think that we can continue to expand that. From a payments perspective, we are working across Africa with some of our South African banks, and we'll continue to do that as time evolves.
Last question that's still in the Q&A facility at the moment, and as a reminder, there's still a few more minutes if you would like to submit your questions. What is the profile of businesses you would consider investing in? Is it pre-revenue, geographical limitations, specific sectors? What's the kind of profile that you're looking for in terms of opportunities that you've got capital to deploy to?
So it's important to recognize we're not a venture capital organization. So from our perspective, we don't mind businesses at various levels of maturity, but there are a few characteristics that are important to us. One is the technology has to be robust. And we have a great set of technologists who can help us do that due diligence and help us determine what we think the technology capability looks like. The second is we have to believe that the product has market traction. And so even if the business is in its early form, we want to be able to see evidence of user acceptance and desire for the product. And then ultimately it is a good understanding of the management that come along with the business. For us, our internal culture is really important. We've looked at lots of transactions over the course of time, and culturally there have been misalignments. And so from our perspective, those are the 3 criteria. Robust technology, the product has to have good market traction, and there has to be a good cultural fit with us as an organization.
There's no other questions in the Q&A facility. Did you want to quickly run the audience through your financial performance?
Yeah, so I'll do that because I think that the performance is really great. So here is the performance of our payments division over the last number of years, and you can see that we have been a consistent performer in how we have grown this business, both from a revenue and EBITDA perspective. In terms of growth this year, we were up 15%. In terms of EBITDA, we were up 33%, and I think it's reflective of some really good performance by the team at the coalface, particularly in light of COVID. At the services level, you can see that we have a very similar trajectory where we have grown revenue over the course of this year, just under 14%. I explained the reason for the lesser growth in EBITDA. It is a business that has leaks and lags where you have to invest in some of the human capital that renders the services, and we did that prior to COVID affecting South Africa. But we expect a much better performance in the second half of the year. Our income statement is pretty easy to understand. We do have a large cash balance. Our interest income over the course of the last 6 months was down compared to the prior 6 months because of use of cash. We did a big share buyback last year, which was 190 million rand. And there's been a reduction in interest rates by 3%, so that explains that. And we have a lower share count outstanding. But headline earnings were up by 29%, and that is a testament to the underlying operations. Our business segments, I think we have pretty robust disclosure where we go through all of the different elements that affect our business. The terminal rental income, you'll see the top line was down. That's according to plan. We understood that we had an old fleet of devices that were in the market that were being leased to a bank. Those who were being discontinued was coming to the end of the period. Terminals have on average a 5-year life. These devices were in excess of 5 years on average, and they're being replaced by new devices, which you're seeing in the terminal sales line item. Overall, I think we've done very well. You can see in the services sector, revenue was up 20% period on period, and the growth that we're experiencing internationally is reflected at the very bottom of the page. The rest of the world, we were up 37%, and it's an area that we are continuing to focus on as we expand our portfolio. Our balance sheet is very simple. We capitalize very little. We have a large cash balance, and it's very uncomplicated. We have some amortization associated with goodwill, which arose at the time of our transactions. We have a little bit of amortization associated with some of the intangibles that we capitalize on our development. But other than that, it's very easy to understand, and we have cash available to help fund our organic growth and our acquisition strategy. Cash flow for us is really important. We do follow the cash, and our cash conversion is 78%. This period was over 100% last period. It's a result of cutoff, where we have inventory and where we have accounts receivable. All of our accounts receivable since September has been collected, and so highly cash generative as a business, which for us is a very important characteristic. I will talk about our prospects, because our prospects, I think, it's very easy to keep score on the past, but the question is, what does the future hold? And from our perspective, we are in a sector that we believe has great organic growth prospects. It's a sector that's experiencing a very positive secular trend. The secular trend has only been accelerated through COVID. We think that the portfolio of companies that we have are very well positioned to capitalize on that, not only in the payment sector, but also in the services area as people migrate to the cloud. And as people look to extract costs from their operations, cloud becomes a more important area for them to invest in. And as a result of that, both of our divisions have positive growth characteristics that we are going to pursue. In terms of our investment case, I think our investment case is relatively easy. As I've indicated, we do have leadership positions in the areas that we operate. We have a good growth trajectory. Ultimately, in the tech sector, it is an issue of innovation, and our history is one of a strong culture of innovation. We have that track record of delivery, because ultimately delivery and execution is what distinguishes you from the competitors. Our client base is reflective of us being their trusted partner. We have won a number of new mandates, even during this COVID period, where people were reluctant to commit new capital resources. And you don't do that with somebody and entrust mission critical infrastructure to them unless they are a trusted partner. And we are financially in a very healthy position. We don't have to worry about on a monthly basis how we're going to be paying our bills. We have the resources to do that, and our businesses are profitable. So generally, while South Africa has been through a relatively difficult period and is probably going to continue operating in a very difficult economic environment, there are elements and nuggets of opportunity which we are pursuing, and we think we're very well positioned to do that. Our teams are committed. We have the capital to do so. We have the technology to do so, and we're we're sort of cautiously optimistic that notwithstanding the challenges, we are going to be able to capitalize on them. Mark, I don't know if there are any other questions that have arisen or if there's any question that you would like to pose.
It looks like there's one question that's come through on the Q&A from Adam. Is there a plan to expand beyond AWS, for example, Azure or Google Cloud Platform?
So the answer is yes, in simple terms. The choice of which cloud platform to use is not ours alone, it is our clients. And many of our clients have elected to have more than one, have multiple cloud platforms. So we need to be able to respond to those. At the moment, we are primarily focused on AWS. They have been the leader in cloud development. They are the leader in artificial intelligence. But there is opportunity in the Azure and Google Cloud areas, and we will embark upon that at the right time, but it's not immediate.
The last question here from Errol. He's asking, is there a risk of your business delisting? I mean, looking at the operating the listed environment on the JSE, is there a risk that the company becomes a value trap and organization and you decide to take it off the bourse?
We're not thinking of that at the moment. At the moment, we're focused on what we're doing, which is operationally deliver the results. We're hopeful that the underlying performance of the business will be reflected in the share price performance. And if we're getting good share price performance, there's no reason to think about delisting.
Ladies and gentlemen, I am cognizant of time. Just Bradley, Michael, Alan, thank you very much for your time today. It is appreciated. It is a big part of this program has been to try and give ordinary shareholders the opportunity to engage with their management, and we really do appreciate you making yourselves available and sharing your story with us. Thank you very much for your time. As a reminder to the audience, there will be a playback facility circulated to all registered delegates. Nay will also be in contact for those who have their Easy Equities vouchers. You've got the opportunity to become a retail investor in Capital Appreciation. Thank you very much to everybody who attended today.
Mark, thanks very much.